Hey everyone, what's going on? This is Kevin at Movement Mortgage. Today's Friday, so I'm scruffy, wearing a hat and hoodie because I'm cool like that. Fridays are casual around here. Speaking of casual, I don't have like a formal video planned for today. So we're just winging it. Today, being it's the first week of October, I always take the first week of every month to look back on clients that I closed a year ago, and I do what's called an annual mortgage review for them. So what we do is we look at what their interest rate was, what their payment was when they purchased a year ago, and then a lot of times we're looking at what the market's doing today. Obviously, we check in with the clients to see like if there's anything else that they would need help with, whether that's a home equity line of credit or just if they're happy with the home. Sometimes they're looking to move and sell and go somewhere else. Generally, this is looking to refinance opportunities. So when we were in previous years, previous markets, if somebody was in a 5% interest rate and I did a 6-month, 12-month, review on their mortgage, and I saw that they could refinance and save, $150 a month or $250 a month, this would be the time I'd reach out to them and say, hey, I think it's a good time for you guys to refinance and take advantage of rates and savings. In today's environment, though, the call really doesn't go like that. I'm not calling them to tell them rates got better because, as you all know, it's no secret. We're here in October of 2022, and rates are basically in the low sevens, depending on credit score and the file. It could be better or worse than that, but that's the gist of it. So what I wanted to do, though, was demonstrate a point. Last year and the year before, everybody was telling myself and real estate agents, like, I think the market's going to crash. I'm going to wait to buy a home. I think housing is going to come down. I think interest rates are going to stay low forever, like blah, 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 blah. And what myself and all the real estate agents were saying at the time was, the idea here is to buy real estate and wait, but don't wait to buy real estate. And for those of you who did not purchase in the last, let's say, a year or two, this might sting a little bit, but basically, you're kind of out now. So if you were approved at 400,000 a year and a half, 2 years ago, you're probably approved for somewhere around like 300,000 now. So something's got to give, right? As interest rates rise, pre-approval amounts basically come down. So the topic of this video is really why you should buy real estate. And I know that right now it seems tough because rates are high. However, sellers are more willing to work with buyers right now, whether that be paying for your closing costs or what have you. And so another example too, I was talking to an agent up in Washington today. They were saying that they haven't seen an appraisal gap come through in about 4 to 6 months. So what was common a year and a half, 2 years ago was when you wrote an offer on a home, you'd have to come to the table with some kind of appraisal gap, basically covering the difference between what the home is worth and what you were willing to pay for it. Now that's really not a thing. And so this is again what I mean by it's still a good time to buy. In the sense that sellers are willing to work with you like they never had been prior to. Also, there's a lot less buyers out there. So last year and the year before, we saw cash buyers. We saw a bunch of people buying homes over what they were worth. And so now we're seeing a lot less buyers in general. And again, that means your offer is more likely to be one of a few rather than one of a many on any given particular home. But what I have here are 3 clients that purchased in October the year prior. So they purchased in 2021. This first one was a conventional loan. Their interest rate was 3.312. So exactly a year ago today, their interest rate was 3.312. If they were to get into a home today, specifically refinance their home, purchase rates could be a little bit different. They're looking at about 7.625. And so that's a huge difference, right? 3.312 all the way up to 7.625. What that shakes out to in the difference in monthly payment is $1,095. So if they waited a year and tried to purchase now, rather than purchasing back then, their monthly mortgage payment would be $1,000 more today than back then. And so the question is, did they pick the right time to buy? Yes, absolutely. Did they have to climb over a bunch of other buyers and kind of claw at that home to get their offer accepted? Sure. Was it worth it? I think of about 1,000 reasons why it was worth it. This client here, this also was a conventional loan. Their interest rate a year ago was 3.125, so 3 1/8. And if they were to refinance that mortgage into today's rates of about 7.625 again, they would be increasing their payment by $840. So what that means is they're saving, I know it's not really like savings, but they're saving $840 a month because they purchased a year ago. So again, buy real estate and wait. Do not wait to buy real estate. And then lastly, we got a buddy of mine. This is a VA loan. His purchase a year ago was 3.375, so not a bad rate at all. And if he were to do a VA IRRRL, he would be, again, back in those low 7 range, so maybe 7.25. And he would increase his payment by $736 if he refinanced into a new mortgage today. So he is saving $736 a month because he purchased a year ago. So same home, same location, same everything. Only difference across the board here between these clients is the time in which they purchased. And their home values are strong. Their home values aren't crashing. Nothing's happening there. The only difference is interest rate. And so this is why every lender and every real estate agent in the last 2 years was screaming from the rooftops, buy now, buy now, buy now. The interest rate was always the name of the game. It was never purchase price. And so I know as buyers, you're always looking at the home, you're always looking at that purchase price, and you're saying, I want a deal. But the deal is not in the home and it's not in the purchase price. It's in the interest rate. So it sucks to say for some of you, I know, you're looking at your approvals now going, man, like, what am I going to do? Interest rates are so high, I can't afford this payment month to month. But I want to encourage you with a final thought, and that is the average life expectancy of a mortgage. These people here will probably do everything they can to stay in this low interest rate. But if they get a job in California, if they have to move, if they have kids and need to expand their family and get another bedroom, they'll be selling these homes, maybe keeping them and renting them out, but moving. And they'll have to get a new mortgage with a new rate. So those things kind of happen over the course of one's life. And so you're never really in the mortgage for 30 years. Average lifespan of a mortgage is about 5 to 7, and that is between a death or a move or a divorce or whatever, dependents, right? Kids. So I would just say, if you were questioning buying now, and this video is kind of negative in that sense, because I'm showing you how awesome it was to buy a year ago, but I would say it's like the old saying, the best time to plant a tree was 20 years ago. The next best time is right now. And so if you were to buy right now and you can afford that payment month to month, I would encourage you to do so and then refinance into the future once rates begin to fall. And there's really no, there's no cons to doing that. There's no limit to doing that. As soon as rates fall, you can start up a refinance and get into that lower rate. So yeah, that would be my advice. So that's pretty much all I got. If you are interested in buying a home now, I'd love to help you out. And if you're interested in learning more about the market and where we think it's headed, I can give you some more information on that as well. Other than that, take care, have a good weekend, and I'll see you in the next one.